Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the marine transportation sector. First up is GLBS. As you can see here, it's trading higher at after hours trading. It's at 10:59. It closed at 7.85 with a high of a day at 11.67. So that was a nice move here in after hours trading. So yeah, if you take a look here at ESEA here, this is the marine transportation shipping sector ETF, and as you can see here, it has been cooling down. You know, it's below 50 on RSI and FASTO, and there was a bearish crossover here on ADX with the red line crossing over the green line. And so in after hours trading, it is at 9.39, but it did close today below that middle Bollinger Band, the dotted purple line at 9.47. If that level remains resistance, a new downtrend could begin. At the 1st of November, it closed above the middle Bollinger Band, signaling it was trying to start a new uptrend, but it stalled out at the 50-day simple moving average at 980. It's going to need to get back above the middle Bollinger Band and turn that 50-day simple moving average into support and get above that 100-day simple moving average in order to head higher. Otherwise, it could come down here and test this 9 support zone. Notice there's really low volume for this ETF, but it does have stocks like DCIX in it. Okay, let's look at GLBS here. So you can see it is still in the bull zone on RSI here at 58. FASTO's above 20. In after hours trading, now it's at 10:55. It was at 10 when I first started doing the chart, making the chart here. Today there was bullish reversal confirmation. You had the bullish Harami reversal pattern formed on Friday. Today the white candle confirmed that pattern. Now there was a close today above the dotted purple line and the red line. That's the middle Bollinger Band and the 200-day simple moving average. If those levels hold, it stays above 660. That uptrend's intact. Now today it hit that next level to break, the blue line, which is the 300-day simple moving average at 810. It needs to turn that level into support to head higher. At $10 and 10.55, that's putting it above the closing price in the first trading day in November at just below 950, and that's going to be the key level to stay above tomorrow. Now keep in mind, if it opens at 10.55, it opens up here, that's going to put it above that upper Bollinger Band, and the candles could work their way back into the bands. You need to be on the lookout for a black candle, a spinning top, a doji, or a hammer. Any of those candles formed tomorrow will signal downside risk. Keep in mind, it's on a 2-day run, so a big gap up open above the upper Bollinger Band, it is the lock and gain symbol or signal if the charts start breaking down. What you have to do is you need to watch the 15-minute chart to see if that's breaking down tomorrow. At $10, you could see it would put it up here at 10.50. It's putting it all up in this zone from back in November 1st, and so the big level to break is going to be the high close on November 1st. That's just above 1150. If it hits that 1150 level and stalls out, it could signal a temporary top. That was the high from back on the 1st. It's filling the jar back up to the level. The risk is up here in the 10.50 level. It could work its way back down into the bands, which is all the way down here at $8. That's why it's really important, if you see that black candle forming, to lock in gains. Okay, take a look at GLBS on the weekly chart. And the black candle forms when a stock is trading below the open, but it's up on the day. On some platforms, it will, like Thinkorswim, you'll see a green hollow candle instead of a green solid candle. Okay, let's look at GLBS on the weekly chart. It is interesting here this week. It's breaking back above that green line, which is the 50-week moving average at 762. If there's a weekly close above that level, it will be very bullish. It'll signal this new uptrend that started back in October on the close above the middle Bollinger Band at the dotted purple line at 492 is intact. If it stalls out at this level, fails to close above on the closing bell on Friday, that's when weekly candle sets. It will signal more consolidation, not ready to go. At $10, it's up here, so it's hitting this zone from back here in 2017 and 2018. You can see this is a sideways channel, and so it's going to be tough to break through here. If they can bust through this zone, it's the December high close up here, in the what is that? In the 13 to 15 range. I wish it had the numbers over here on the side, but it's going to be all about breaking this December high close, the top of this range from back here in 2017. Okay, let's look at PXS here. So yeah, they had a little shakeout today, closed down 13%. it is holding the middle Bollinger Band. That is key. So keep an eye on that level. It's currently at 181. That's the dotted purple line. Notice how these candles are bouncing off of that level. As long as it's holding, this uptrend is intact. Now today it's trading at 230 and after hours trading. That's putting it above this closing price from Friday. And so you want to see it stay above that level. The next two big levels to break are going to be back here on the 31st of October and the 1st of November. These two closing prices. If it stays above 230, look for a potential run back up to this upper Bollinger Band at 310. It has to make a new high close, otherwise it could form a double top. Okay, yeah, let's take a look at tops here. So yeah, tops is also trading higher, and after I was trading, it's at 173. It came down and bounced off of the 200-day simple moving average last week. That level held. It had a nice bounce. It came up and it filled the gap between these two candles, and so that was key. And so basically what it has to do here at 173 is whenever a gap fills, you want to see the share price stay above the top of the gap. You know, and that's right here around 163. So trading at 173 it is bullish. It's going to put it up here. Now the risk here on these stocks, if they gap up and there's a space between high of day yesterday and low of day tomorrow, or high of day today, which is the red candle today, and then tomorrow's candle, low of day, if there's a space between the two candles, that gap will fill at some point. These marine transportation stocks, they fill gaps. So have no doubt, tops will fill that gap. Just like this gap was filled between the space between these two candles. If there's a space tomorrow between this red candle and the next candle that forms, then that at some point they will fill it. Now they could run it before it fills, but just keep in mind if the chart breaks down, the risk is it comes all the way back down to 160 and fills the gap. Now as long as that middle Bollinger Band holds at 165, the uptrend's intact. What you're looking for, it really is a close above this November 31st closing price at 210. That's the big level to break. Once it closes above 210, you could get a run up here to the 300-day simple moving average at 266. Now, when a stock retraces back to a high close, this high close horizontal resistance level, if it fails to close above when tested, that signals a temporary top. Okay, let's look at DCIX. Once again, it's trading higher, and after hours trading, this is just slightly higher. What is it at 163? I think I read that right. It's barely moving. Okay, so the other ones are bouncing more, but the key on this is the red line, and that's at 162. And so you really want to see it stay above that level. Let's check it out real quick for you. Where is it at? DCIX is, yeah, it's at 163. It did hit 169 there a little bit, but yeah, people aren't really like just jumping all over this right now. The big thing is it has to get above 162, the 200-day simple moving average, and then 167, that's the middle Bollinger Band. Once it's above these two levels, the dotted purple line and the red line, then the new uptrend can begin. It just similar to this, you know, when it got above the candles, it was able to push higher, and so that's what you're looking for here. If they remain resistance, the downside risk is you're going to get a retest of this 50-day simple moving average at 136. Okay, so take a look at ESEA, EC here. Okay, so yeah, this has been in a downtrending channel. You could see how this, they really walked it down on super light volume. Look how light that volume is. Just a lack of buyers, right? And so it came down and it hit the 50-day simple moving average. That's the green line at 152. That level's been holding. And then now it's trading at 165 and after hours trading. Well, if you look here, the top of this channel it is really at about 163. So 165 is putting it above the channel. A break above this multi-week downtrend should be the signal that it's ready to head higher. Now, unfortunately, there are moving averages stacked above, and that does always make it tough. So it's going to be all about this 181 resistance level. That's the 200 and 300-day simple moving averages. If it breaks back above that level, well, I'll show you exactly what it could do. Over here on the 22nd, look what happened. It got above the red and the blue lines there, and it ran all the way up to 390. I'm not saying that's going to happen, but there is a chance if it breaks above that level that it retests this closing price on the 22nd at 240. Okay, so yeah, let's look at DHT here. So yeah, yeah, this stock, yeah, unfortunately, let's see. Sorry about that. Silly computer here. Yeah, the DHT is bound. I wanted to show you this one because it's bouncing, or not. I don't know if it's bouncing. It's hitting. It's hitting support. Okay, so it just looked interesting. It pulled all the way back. It has the 4 red candles in a row, and then it's hitting the 50-day simple moving average, the green line. Look how, okay, so it broke above that level back in August, and every time the green line gets hit, it bounces, you know, during this uptrend since August. And so if that pattern repeats, especially after 4 red candles in a row, I think there's a good chance that it bounces off that level. Now, if it breaks below 481, that's the 50-day simple moving average, look for a bounce off of the 100-day simple moving average at 465. That's the level that it bounced off of in August before it got back above that 50-day simple moving average. So I would bet that one of these two levels will be the technical bounce for this multi-day pullback. So yeah, this looks like a pretty, this is going to be a nice little juicy setup for just a quick trade on a technical bounce. It would have to get back above the middle Bollinger Band at 502 to you know, keep the uptrend going. But right now, this is the bottom of this channel. You can see it's got this uptrending channel, and so this is like the bottom of the channel. And then it could, if it did bounce, get back above the middle Bollinger Band, you know, come back up here and retest the top of the channel. You know, if it broke below support there and then it failed to hold that 100-day simple moving average, that would signal downside risk. The big risk is it would come back down and test that 200-day simple moving average at 419. Keep in mind, anytime you have 5 days down in a row, that's a good juicy setup for a technical bounce play. Like they say, 5 days down and rebound, similar to right here. Okay, so you have, what is this, 1, 2, 3, 4, 5. This was 6 days down. Once you get more than 5 days down, then it becomes even a better setup. And then look what happened. It bounced, and then you had the multi-day run. And so, yeah, like right here, you have 1, 2, 3, 4, 5 days down, and then you had a technical bounce back to the middle Bollinger Band. So that's basically what you're looking for here. That's what you look for anytime you see multiple red candles in a row. Once you get to 4, put it on your radar, because you know, 5 days down is a good setup. And once you get more than 5 days down, it becomes very interesting. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis and stuff like 5 days down and rebound, please come check out the chat. All right, thank you.